Okay, good morning, everybody. This is Monday. What is it? The September 21st. We're going to be going from 8 to 9:30. And our disclaimers, as we always have to do, it's the trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies rules for entry, exit, targets, and risk management. Now we got that out of the way. Let's go to the, let's change screens here, and we're going to stop sharing that one, and we're going to go to share, and we're going to go to the news, the Forex Factory for the news. We have a red folder event at 10 o'clock this morning with Fed Chairman Powell's going to speak. And then you'll see there's quite a few, as Ruben said or pointed out earlier, there's quite a few red folders the next couple of days. So we'll keep that in mind. We'll keep an eye on what time they are and where they are. We did get an alert for the a descending wedge on the British US, which was the last one that we received. And so let's take a look at that. And that was at 6:45 this morning. And you can see this thing's going, it's pretty much going sideways. If you look at it from in an hourly chart, it's really kind of going sideways with no real, um, uh, this was a nice move over last night from the overnight session. Here's, I'm looking at this is on a 1 hour chart. I had to come all the way over here to September 14th to find a level, which is where it's bouncing off of right now. So this could potentially be a turnaround area where it's going to bounce. If it does get through this area, we're looking at probably coming down and probably not going to be a straight shot, but down to this area. So let me, and it's important to see where your targets are to see if you're looking at an area where it's going to be turning around and bouncing, or if it's in an area where you may be actually able to get to that last area of where the price is left. You can see this is pretty much, it was a nice gradual slow upward sloping, and it just, but now it's coming, and that's what happens a lot of times. It goes up real slowly, bounces around, and then it just crashes on down, tests it, and then right now we're looking at, this would be the area where this whole move came from, and we're looking at, this is the area where it's bouncing, and you can see where it's pretty much right there right now, and we had a nice little bounce right here where the B is. As I draw the wedge, like I said, it was a descending wedge, so I started my A up top, came down to uh, the low, so there's pivot high, pivot low, here's a lower high at the C, and then we have a higher low at the D area. Try and tuck that in as close as we can, try and get a nice little trend where we have an anchor, a hit, and so this is the wedge. Now once it breaks the C, it could come all the way up to this next exponential moving average. But I want to see it close above the C and the A area before I do that. Let me see how much room we have between the C and the A. Because this is all the way, these are sellers right in here, so I wouldn't expect it to be a real clear run up above that level. As you said, a lot of times what we do is we like to look and see where the wicks are. And you find out where the top of the wick is. You come over to the left, you find the next wick. This is where all the sellers are. Once we chew up all the sellers here, this is the next area where that's going to go to. And by that time, this 62 up here could be pretty much right in line. So we're going to mark this as a potential target. if we get the break below here, this would be the target area up here. And I'm going to mark this as a target 1, target. And if we check our fib lines, you're going to see that we're right at a, actually we're not either. Let me see here. We are, let's look at our 5-minute chart. See where the fib lines are on this. And you see right now we're sitting right here at the screen fib line. This would be 21 pips up above on the 5-minute chart. We'd have to get through the 62 on this. So right now we're looking at trading right in between this region right in here. And so I'm just, again, I'm not going to be too anxious to take this trade. And we can move the C over. I mean, right now, this is where the alert was. Let me make this my normal color here. We have the alert at, actually should be 6:45, I believe it was. Yep, 6:45. So we can take this as our, I want to keep my, so here's where I want to keep this as an area where I want to see it. It's coming right into where the 62 is. We did get a break here. Again, I said I did not take this trade. I didn't really like the range we had on it. And right now, from the actual break where this candle closed here to where it is right now, you'll be up to 10 pips. I would not expect it to go much more. But I expect to get a bounce off of this 62 right here, this purple one. Let me go and mark that. And it's 5-minute 62. And you can see where that's pretty much right here where the A is. This is where the top of this move started. Oh, that's where we kind of drew those lines. I could put the A right, this one right here too. Once this breaks, I say here's a nice wick right here. So I want to hang on to that wick to make sure we note that, because I would expect there's going to be some sellers in here. We're still making a lower from the A to the C. We have a little bit of a hit here. And you can see that if we take it just to where the body of this candle is, we have it came right up. It pretty much stopped right there, rejected it, it came up, and now we have a wick. We don't really have a strong close above this point. So I would like to see a close above this wick. And actually, pretty much I'd like to see a close above both of these, because these are just all wicks right in here. If we get a close above the A line right here, then I say we're free to go on up to the top here. But right now I'm just looking, this is just a pullback, and we still have a lower high and a higher low. Any questions so far? Let me see if I can get all my charts up here. And that's where we are right now. That's British U.S. trade. It does have some strength to the upside, but I still think it's going to be somewhat range bound. It's a nice gradual, slow sloping trending, but I would not be surprised to see it come back down and retest this trend line here. We have an anchor. Here's our hit. Here's a hit. And so I think it's very possible that this is still staying within this wedge. If I were taking anything at all right now, I'd be taking this thing short, trying to get 7 pips out of it, but I'm just going to let it sit. Being a Monday morning, a lot of these pairs are taking their positions, getting their positions set up for the week. And I just let them get themselves in there, take their trades, and see how they run it up for the rest, up or down for the rest of the week. Let's see, the other pair we had was the U.S. yen. Now this one is a little bit interesting, because if you're looking at this off of let me get on a higher time frame here. Here's my 1, 5, 15. Let's go to the 15-minute chart. You see I've got this in a green demand zone. And when this thing, we got the alert at 6:45. We'll just draw this one out. I think this was 6:45 as well. Yep, 6:45 this morning. So here's where we had the alert. It was a ascending wedge, so that means it was going from low to high. So we would be looking at something like this from low, oops, there we go. From low to high to low to high. And here's our basically at the wedge. Now we can take this, I like looking to see if I can find my anchor and a hit. So here's an anchor, here's a hit, here's another hit, here's another hit. So this is kind of where we're gonna park this one. It came right up as the alert happened. I can still use this after that candle closes. And it does have a little bit of a breakout, but again, I want to see, we have all these wicks here. If we can break above this level, I would want to see it close above this line right here before I'd want to take it long. We do have the 62 right up in here. That gives us a little bit of room. If we measure from, if we get a break here to here, that gives us 9 pips, just barely enough to get our 5 or 7 range. I like seeing a little bit more than that. The other thing is also look and see we have this strong wick right here we have to deal with. And once we get past this, then we have this whole area right here. And so this would be more a range I'd be looking at. And so I just don't like the range that we have available to us on these. That's why I'm sort of sitting on the sidelines with some of this. Might as well wait for good trades. But here you have the wick. You come over here, just a couple little short wicks. There's a little bit of a punch right there, but there again, it would only give you about 4 or 5 pips. But this is what even more significant is, that if it does break to the top, you're looking at the 62. And that range is like from here to here. Again, that's 12. But if it breaks to the bottom, here's what the problem I'm looking at with this one is that right now we are in a 1 hour in a daily demand zone. Here's where the price is right now, but you have to go all the way over. When you come all the way over, here's a wick, so it's chewed up all these buyers right here. So penetrate through this, so we can actually take this over to this point. Now this is on a daily chart, so just keep that in mind. But you have this is nothing more than a great big old wick right here. So right now you have all these buyers on a daily schedule time frame. You have all these buyers in here, and then you also have another little layer right down here. And so right now it's coming near the end of a strong move. I just want to see it kind of get out of this area, at least clear the top of this before it goes long. Or, but you've got you can have a lot of resistance trying to get through this part. That's another reason I don't really like that trade, because I mean, if it can come in and come back out and give us an indication to go along, that'd probably be the best choice right there. And that's, I said, you had to go all the way on a daily chart in order to find that. Now, if I come onto a 4-hour chart, I can maybe tweak this area up a little bit. Here's where that big move down came in. It was rejected right here, and that's pretty much where we are right at the moment. And we come over, we may be able to make this a little bit tighter, possibly. Let me see. Not much. Could maybe use this. And I said that's where I said I'd be more apt to look at this thing to breaking to the upside a little bit. Look at the 5-minute chart. Any questions, comments? Now here we did have a high, a low, a lower high, higher low. Now this one broke the C, so, but it's still a higher low to the A. So if we got a break here, then maybe we could come on down to this area. And that would give us some room here on a, if you're only looking for your 5 to 7 pips, that would give us a 23 pip range, which would still work. Some of our, and I would say that we'd be looking at a bounce off of this 103.94 level. It'd probably be an area that'd be looking at a bounce, as well as this blue line up here is the 104.29 area. And right now we're in between, right in the middle of those two zones. Make sure I'm on a 5-minute here. I am. So right now we're in the middle between these red and green zones here. And so if I were to draw some boxes, I'll make this, I'll put this on a 2-minute chart. Supply, we'll make this, the bottom third of this will be our demand.
What would you say, Al? Would you say this is more of a continuation, or does this look more like a reversal of a wedge?
I think it's, right now it's undecided, because the continuation would get you down here to the demand zone, which there's enough room to do that. But right now I'm seeing it right in the middle of it. Can't quite decide whether or not. Right now it's in the middle of a range. So if you get a break, right now I'm seeing in between this 21 pip region right here. If I put this on a 2-minute fib target, go to my 1-minute chart here and put the fibs on with this one. And we're going to, so here's my blue zone, here's my red zone on my 2-minute chart. Supply, come down here and move this to the green zone to the blue zone on the 2-minute. And this will be our demand zone. Let's see if we can, where's my, there we go. There's a demand zone. So right now in our 21 pip range right in here, let me just double check this range on that. From here to the top, well, that's only 11 pip. That's why I use it. That's why this is a US yen pair. So on the US yen, it's, we actually like the five period, because the ranges are about half the distance on the yen pair, just because of the nature of being of the yen. So let's go with the, up here with the, let's see, move this up to the blue up here. Here's our supply. This looks a little bit better, actually. Bring it down to the blue. So we go from blue to blue, and then keep the 1/3 above. So right now we're right in the middle of all this. So we want to, and so I just don't like this. I just don't like where it is, and I don't like what we have for our range settings. And that's another reason why I don't particularly like this trade. What do you think, Matt?
Yeah, something just looks a little bit off. Does it? It just feels a little bit off. You know how it's breaching the top of your trend line like that, and it's just fizzling out, and it's not really moving out of there like it should.
Yeah, like I was saying, is that we had a lot of wicks. I believe this is the one we had a lot of wicks on. Right where we had the wedge, we had the anchor. Here's the hit. Here's the hit. It's still maintaining the 62. It's still respecting that. But we also got some bounces off of down below. Like I said, if it can break through this area right in here and get a break and close below the blue, this blue area, this demand zone, then we have a shot at the bigger demand zone down here, which is off our 1 hour or 4 hour chart. So, but even if it breaks the wedge, you're only looking at 6 pips. Now take your 2 pip spread in and out. It's going to be really hard to make any profit off of that. So I would want to see this, a nice clean break below, especially, I like to see below break, test this fib line, have a break, close, retest the fib line, retest the wedge, and then break on down. That would be my choice of this. We had the test of the 62. That would be, again, that would be an area where I'd be looking at maybe trying to take it short. because this is a supply zone up in here.
Yeah, no, I'm more of that opinion as well. I mean, it looks like there's a whole lot of downward pressure, right? But it doesn't seem to be doing any higher highs, right? It has one higher high, and then it just kind of starts doing sideways traffic.
Yeah, like I said, a lot of times on Monday mornings you don't get a real. I mean, sometimes they work out really well, but this morning everything seems to be a little lackadaisical. We had an alert on the Swiss, and that was at. I thought I saw an alert on the Swiss. No, that was something else. Looks like we had one. Yeah, the last one we had was basically British, U.S. yen, and we did have one at gold at 4 o'clock, which we don't generally trade gold, but we can take a look at that. Let's see. Let's just keep an eye on what this British one does. This is a nice little series of higher highs and higher lows. But if you look at this off the 5 minute, you see I have a nice little move, strong move down, a little bit of a flag right in here. If this thing can break, this thing could give us another run to the short side just by this is a strong move down, almost straight down. Very few blue candles in here.
Yeah.
There's one little one right here. And we had a pullback. So if we have do our Fibonacci retracement tool, which we have down here, we come up to the high, to the low, where the B is, come back where the C is, and the retracement you can see is between the 23 and 38%. Move like that could give us a nice little run down to this area right in here, which has put us right into this secondary demand zone that we have. Now that could be, I like that better than anything, but we'll probably get a bounce off of here. If it can break through this, then we have a shot. But this would be the area that I'd be looking at, that this strong move down could come into making a nice little, this could be a possible trade here.
UJ just looks to have gone up 8 pips. So
UJ.
Yeah, I think some things are starting to move right now. You see how that one just came down and melted.
Let's see with UJ. So
I mean, if it bounces off the top of the wedge, I don't know. It might be an option, but I like GBP better.
I like the target area for GBP, but like I said, I want to see it. Now we did have this is a nice little trend line going on up. If I take this and just try to align a couple of hits here. There's one, there's two, here's the break. If we could break through this, let's see, how's our strength meter doing? What's our strength meter doing? RCS tool. On the 5 minute, we've got a spread of 3 on that for the strength to the US. Right now, the US is showing some strength, 6 to 5. And again, I like to see a spread of 3 on the 15 minute. I have a spread of 3 on the 5 and a spread of 4 on the 1 minute. This could be I mean, if you wanted to be aggressive, you could take this on this bounce off of this trend line right here. Here's an anchor, hit, broke the trend line, strong move down, but be careful, this could be a trap in here.
Excuse me, Al?
Yes, Christine.
Beach Panda has a comment and a question.
Okay.
I don't understand New York being in the time or sessions being the setup for the upcoming week when London session is the major of the 3 different major markets. Why wouldn't Asian or London, the canary in the coal mine?
I don't know. I understand the question. I know basically the London to the U.S. session is probably the strongest market of the day, when between about East Coast time, about 1 o'clock in the morning to about 1 o'clock in the afternoon. That's where most of the money that's what you call the money. That's what's been called the money zone. So that's the between the London and the U.S. The close of the London market and the opening of the U.S. market. There are other. I mean, there are other areas and sessions that do work pretty well, but that's just, this session we're trading right now is the strongest session. I don't know
Yeah,
what else. I don't know what else
the
to say about that.
Asian session doesn't move like this.
Yeah.
I mean, it would take quite a while to see this kind of movement unless there was some type of news announcement or so. Still tradable, guys. You don't have to trade the New York session, Euro session overlap, but we just found that this is where you get some pretty significant moves, and you don't have to wake up at 4 a.m. and trade the London session and trade the British pound and the US yen, the pound yen, when you're playing with very tight stop losses. You can actually have a life when you trade this way. Unless you have a child, and then that changes things.
Then there's no life.
Well, your priorities are completely upside down.
Yeah. I have two, so I know what you're going through, Matt.
Yeah.
Now, if I look at this, if you look at the 1 minute chart, we had a nice little drop base.
This looks great.
Yeah, actually, it's actually looking pretty good. So I didn't take it just because I'm not real anxious to take trades on Monday mornings. But this looks about as good as it's going to get probably for right now. That was a nice little flag pattern up here. We did get the break. It's get this little test, little basing right here. And now it's going to come down, probably retest this area where we kind of drew this. Let's see, here's our B anchor. Here's our, so I'm going to hold this, keep this there.
Yeah, if you got in on that break, you're almost 20 pips.
On the break here?
Yeah, well, what I saw on GBP, right?
Oh, yeah, that's right. It is GPP. Okay. So from this one right here, break, come down, and right now we're at 12 pips. Yes, that was.
Oh,
nice
yeah,
little...
no, maybe I was a little bit more aggressive on what I saw. I was looking from the bottom of the wedge, so.
Let me see what I've got. I just moved my line so I can't even see what I did here.
But if you are in here, like it could make a higher low right here and cause like kind of a little bit of a rejection, I would expect right here where it is.
So here's my low, here's the high, here's the alert, and here's the lower high. Came back up, tested this was the 5 minutes 62 right in here, came up, tested that, and now we have this little flag pattern here. I would like to see a break below the C at this point. This was your earlier entry, this little trend line coming right up in this area. This was your earlier entry where you had the anchor. Here's a hit. You didn't get the third hit, it just blew right through it. But now you've got possibly the third hit on this level right here. Anchor, hit, and here's the test of the AC line. Come over here and put this on. And actually what I'm going to do is I'm going to validate this with the arrow on the third hit. And now if we get the break here, and then we have an opportunity possibly to see, this was the earlier entry, now it's testing the bottom of the trend line. Now the question is, do we have enough room from here down to here? That's 13 pips. You could probably get your 7 pips out of that if you get a good entry on a break of the C. That's on the 15-minute chart. We're going to go over here, see if we can tweak it up a little bit on the 1 minute. Here's my A. Here's a anchor. Here's a hit. Actually, this was a little bit more of a hit than I like, but it might be within my 2 pip tolerance. 28.39 to 28.37. I still have your 2 pips there.
Yeah, that looks a little better there, but
Right there, that looks a little bit better, yeah.
yeah.
But here's the anchor.
Yeah, there you go.
Here's the last. Here's where the third hit is.
So based
Coming back
on
to rejected.
based on that, it looks like it might come back up a little bit. If it goes up pretty high, I mean, it might be a good entry for a sell, as long as it stays under that other higher low, right?
Yeah, because here's
Or
the
higher high.
here was the alert. But I said I want to make sure we got to close above here. We didn't get the close above that. We have the 62 right here. Here's our B. So here's our anchor. Here's the hit. Here's the trend line. It did break to go to the upside. Came right up into the 62, and it was rejected. We still have a high, a low, a lower high, and a higher low. So right now it's still trending inside and basing inside this whole area right in here. If we get the break of the C, then we could come right down into this demand. That would be my target. It may penetrate in there a little bit, and you have another target underneath here. So right now I'd be looking to wait for a close below the C level, which is going to be, if I get my ray here. So if we can get a close below this area this one right here, which is at 2845. If we can get a close below the 2845, then we could be heading on down to the 30 area. And that could be a strong possibility. Like I see, we had a nice little trend going on here, and it broke it. We're on a 1-minute chart. We have our moving averages are all in the right direction on the 1 minute. They're in the right direction. We have the purple, green, yellow, green on the 5, and we have the on the 15. We have the oranges all the way up here, which is our 62, and so everything is in the right direction to go short. And we finally got our 3-point spread on our U.S. Right now, the dollar is the strongest currency, so we would be taking that to the short side. Now this one I might be willing to take if it breaks the C. Check our fib tool here and see where we have. Here's the supply. So they're right at the blue line here. We got the bounce off of that. If we can get a pass, check, come back up, retest it, we could be looking at this target right down here. That would be your 7-pip target from the blue area to the red, from the red. And so if you want to, you may want to get your charts getting ready as we can see if we can get the break of this where the C is. And this is the British USD. That's what we're looking at here.
Actually moving pretty good as well.
Yeah, it's getting a little bit,
It's
has a little more life on it right now.
yeah, just a little bit.
And let's see, how strong is our other currencies here? Let me see. Let's see where the euro is on this. Check that out. Euro is not too strong there. Little weak to the dollar, weak to the British. Euro's the second weakest on that one, and the second weakest on that. So yeah, I just want to double check the strength of the euro to the British as well. Yoshin, here's Here's our pullback. Now, if it can hold the 62 up here on the 1 minute, that would be helpful. Coming up, getting the hook off the 80. It's coming up to 89. The 15 minutes below the 60-40 range. 5 minutes below the 60-40 range. We're coming up, get the hook.
Yeah, your moving average is crossed, eh?
Yeah, I'd like to see a close below this blue candle. Then it could possibly be another entry. Right now we have a little bit of a, well, it's still not quite ready to break through yet.
Yeah, it seems like it wants to go a little bit higher before it comes down, but that could be a good sign, right?
Yeah, well, the harder it pulls back, the more likely it is to break through.
How was your trading in the early morning, Al? Was it not too bad, or no
Well, I
alert?
didn't take anything. Right, this has been pretty much the early morning here, and I haven't really taken anything yet. It was, I said, it just didn't have the range that I wanted, and it's starting to get a little bit more lively here as gets closer to the U.S. Open.
Yeah, no, it's better to hold off if you're not 110%, right?
Yep.
No problem not swinging if it doesn't look right.
Ruben, you've been up for a while. Have you seen anything that was worth taking this morning?
No, not really, actually. I did hit my take profit from a trade that I took over the weekend, so that's nice. But
That's good. That's a good way to start the week.
I actually just kind of like you do, stay away from the charts on Monday morning. The main reason because of that is because it has been weekend, and I'm not quite awake on Mondays.
Too hard of a
At
weekend.
least you're honest.
Too hard of a weekend. Yeah, I find the trading week starts a lot like people do. Is it just kind of
Yeah.
slow going sometimes? So it has to be pretty compelling before I take it on. Now this one, let's see. Are we looking? This one's looking better to me than it did even 15 minutes ago.
It was 1 pip away from 38.2 retracement on the pound US. Let's see if it comes back up just a little bit.
I'm going to draw it out on another chart that I have here and see what it looks like.
We're still at a higher low on the 5 minute. But that would represent divergence, wouldn't it?
On the 5 minute, let's see, we have a higher low with a stronger
move down, right, or whatever
yeah.
you want to call it. Like it's almost in the lower portion of it, but it.
Usually the divergence I see it usually where it's a weaker
Oh,
lower
I
price
get
and
you.
weaker.
Yeah.
This is almost like a negative revergence, which is still divergence. I'm not. It's kind of opposite of what I'm used to seeing. And now it's weaker with a lower price.
Right, I know what you mean.
Now the question is, what does that mean? I'm not sure what that means. But the 62 on the 1 minute was still okay. We had one thing I like is that the screen came up tucked up underneath, and it couldn't cross the yellow. So this was so I think if we can get the close below the sea level, I think I'll take this one short. I want to see that happen first. Our RSIs are looking good on both charts below the 60-40 range. We came up, get a little bit of a hook, have a hook up here. It's retesting. So I want to see, we did get the close below this blue line right on this one. Let's see, that's at, and we could have a little bit earlier entry on this possibly. We got the close below here. That's at 49. This is at 45. There's a 4 pip spread there. 3 pip, 3-point move on spread on the U.S. The British U.S. here. The dollar is still stronger. So we got factors of 7 on both of them. And we'll see if we can get the break here. I like the fact that the dollar is strong on all 3 time frames. It's the strongest currency on all 3 time frames. And we're coming up near the 9 o'clock hour. If we can get the close below the C here, we should be good. And the target here is going to would be the Fibonacci red line, which should be 7 pips away. 43 to 36, that'd be 7 pips. See if we can get a entry in this. We didn't get the close yet. But I would like to see something. I'd like to see a close somewhere in this region right in here. Came down, wick down. Tested the bottom of the wedge. This is the 4th hit right now.
New alert just came in.
Was there a new alert? Let me see.
I didn't hear one. You want me to check?
US CAD. Looks like a US CAD ascending at 8:45.
Good job, Ruben.
And so if somebody wants to take a look at that, Matt, you want to take a look at that one while we're watching this thing break?
Matt stepped away for a moment.
Oh, Matt did? Okay. How about Ruben or Christine? Why don't you guys take a look at this one? Or keep an eye on this British, or keep an eye on the British, and I'll take a look at it.
Alrighty.
Let's see, let me put the British US CAD on this one. Is US CAD. And it was a ascending, I believe. Ascending, 8:45.
Matt's back.
Ascending, let's see here, 8:45. Going to put it on here at 8:45, right there.
Matt, Al's checking the new alert.
All right, cool. Sorry about that.
Yeah, there's a US CAD. Someone keep an eye on that.
Ruben has it.
That British USD.
I have it.
Cool.
Yeah, while you're playing with this one, Beach Panda has, I was a few minutes late to the start of this morning's Hawkeye. So if Al mentioned why he wasn't taking a wedge within a wedge, I missed it. If not, then is the reason we're not doing that part of the organics of being flexible to accommodate the market?
Well, I said basically the bottom line is we didn't take that one because I didn't. One, it was Monday morning and it didn't seem to have a lot of strength. It is starting to pick up some strength on that British US. It's starting to develop into a little bit of strength.
Yeah, British
But
US just broke the
It's
bottom.
breaking, yeah.
Yep.
let's go take a look at that. There we go. There it is.
Nice.
Sure did.
Yeah, the cat actually is already taking off. So let me just see. I'll wait for a pullback on that one. So let's go back to the British cat. We're sitting there looking good on this one. Our 8-pip target's right down here at the Fibonacci line.
Yeah, I'm already in that one. GBP USD. I just took it as it broke out. It's a little bit early, you know.
I did find some buyers came right back in right in this area here, but let's see if we can get the close on the 1 minute. There's our close below our blue line. Did have a nice big move down.
Let's see what happens.
Yeah. Right now we've got all of our moving averages are correct. Right now you could have your stop above I'd like to probably keep my stop above. I'd give a little bit more room. I like the 62 on the 1 minute when we start getting these breaks like this.
Yeah, it tends to be a pretty good stop loss. You know,
Yeah.
the 1 minute 62. It seems to be pretty decent.
Yeah, if you get the close, if this thing starts to flatten out and you get the close above, you may want to be getting out of it. But right now it's respecting the 13 moving average on the 1 minute, it's respecting the 5 and the 13 on the 5 minute, and everything else is looking good for a short. And I said we're looking to come down into possibly this area. Here's our 7-pip target, this next fib line right down here at the 128.36.
Yeah, this looks nice. There we go.
Clean this up a little bit.
It's gonna fight a bit.
God damn it, just when I was about to take a toilet break.
I say you go in, you get a cup of coffee, it costs you $100 because you missed a trade.
Yeah, minimally. That's why I just stepped away for a sec. I'm like, all right, I gotta hurry up because we're approaching the 9 o'clock hour. So
yeah, and you start getting some of these nice moves right approaching 9 o'clock. I'd like to be out of this trade before by 9 o'clock.
yeah, because it could, no matter how it looks right now, it could turn around. The Euro USD lost a lot of strength over the night.
I haven't even looked at that one yet.
Oh, okay. Looks like it moved down significantly.
After we get done with this trade, we'll take a look at the US CAD and see what it's doing. I'll put it on another monitor here so I can watch a little bit before we get started, before it goes.
Yeah, I only have one monitor now for a little bit. I got some relatives downstairs. I'm gonna move my trading station upstairs.
And right now the CAD is whatever it's doing, it's already taken off for right now. I'll have to wait and see where it can pull back.
I gotta go get the little man. Hold on, I'll be back.
Okay. Not seeing any place to get into the CAD right now, so we'll just keep our eye on the British US. So we did get the close below our close below line. Coming up right now, it's coming up to retest the wedge. All of our moving averages are still good. Still have some strength to all my 15-minute moving averages are all still pointing down. This one's coming down here. This one's coming down, making this one a little bit, that one's still good. came back up, retested the wedge. And like I said, our target right now is that this red fib line or 7 pips. And this thing could go, I mean, it would not surprise me to see it come down into this demand area. This is where it pulled back the first time. Came down a little bit, came close to it, pulled back. But I like this area down here, but this is my target right in that one. Get my 7 pips on this, I'll be done for the day. See if we get another little push down. We don't have the hook on here yet. All moving averages are still red. Let's see, we're still 7 minutes from the 9 o'clock. Still respecting the green 5 minutes moving average. Or the 5 period, I should say. Coming back to retest the wedge again.
All right, I'm back.
A little strong rejection of that level right in here at the 28.39 level. Going back in, retesting the wedge, retesting our 62 up here. That was a pretty strong rejection of this level right down there.
Yeah, that means your trend line's on point.
The question is it going to, was this just a pullback to retest to go back and get some more of its buddies to take it short, or is it going to go long? Right now, as long as it stays below this 62, I'll stay in this trade. If it comes up and closes above it, I'll be out of this trade. You don't want to turn a winning trade into a losing trade. This one has the potential of doing that.
I'll let you know if I decide to take another position on the short side of that trade. We'll see. The whole moving averages are all in the red, so
Yeah.
except the 1 minute on the 1 minute chart, but that's because of the calculation. You see your hook back on the RSI, but it's not at the extreme yet on the 15-minute, so it means that it could probably come on its way down.
Yeah, we still have our 3-point spread on our 15-minute. Still have 3 points on our 5. Did get the flip on the 1 minute, but that's not unusual for a pullback. Three minutes till the 9 o'clock hour comes in, which would be the close of a 1 hour candle.
Yeah, this might be my second entry for a short. We'll see what happens in a little bit. It's a smaller position. It's not. It's only. It's not even 1% of the trading account.
I don't like the fact we have the cross of the 5 and the 13 on the 1 minute. We are getting the bounce off the 62.
Yeah.
But this thing at the hourly close, it could go up higher and then come back down.
There. Could come up just a little bit more than that. I wonder what it rejected on.
So there is news at 10 o'clock on US dollar.
Oh, that was 38.2 retracement. Okay.
Oh, that one right here from this 38.2.
Yeah, from the origination of the move at the top there, the red candle.
At the D.
Yeah, all the way to the bottom of that blue candle. And then that was a 38.2 retracement to the pip. And then we had that big 5-minute, that 5 pip 1 minute candle on the downside, but I have a feeling it's going to pull up a little bit higher. But we'll see what happens.
We're looking at from this D to the low to the high. So we're then looking at see what our target could be from that move. So we're looking at from the D to the pivot low up to where it just retraced. And then our target is right down here in the middle of this zone. And if we look at for a Fibonacci mark, it's right here at the red, which is pretty much where our target was originally here. This is on a 5 minute. So we're getting a nice little break coming down.
Well, the hourly candle just closed, and if you look, it closed under the wick of its previous candle.
Okay.
That might be good, because that's where it was, the area it was testing a little bit a couple of minutes ago.
This could be a possible target right here off that retracement. I'll take this off so we don't get things too confused. It did respect the 13 and the came up right in between the 13 and the 5 on the 5 minute chart. Still retesting the bottom of the wedge.
Each Panda just said, just heard that USD news is going to drop in about 1 hour.
Yes, yep. There was one. Chairman Powell speaks at 10 o'clock. So we did get the anchor. Here's a hit. Here's our third hit. It did break it. It's still consolidating. It's actually drawing another forming another little wedge right in this area. Let me just take this off for right now because this kind of gets in the way. But we have a little, here's a high, low, lower high. We'll flatten this one out to the bottom. Anchor, hit, see if this C can hold, see if this trend line can hold. And we have this is on our 5-minute chart. So we have, here's our third hit right there. And this one is broken. This one's still holding. Has a little significant, the higher the time frame, the more significance it has.
Yeah, definitely. I'm liking the 5-minute as a home. I find that whenever it does break, I'm not getting my head so messed up.
So Matt, you even using the 5-minute for your entries?
I'm definitely monitoring it on the 5-minute. Sometimes I'll enter on the 5-minute. If things are not really clear, I'll use the 5-minute. So right now we're gonna see what happens.
I've been using the 5-minute for entry, Christine.
Oh, okay, Ava.
Yeah, I wouldn't go any higher than that because then you're getting into an area where you're gonna have to use a bigger stop loss.
No, I know. I just thought initially that we did entries on the 1 minute and monitored on the 5. That's all. That's why I was asking.
Oh yeah, no, for sure. I guess it's as a general rule, but sometimes it's circumstantial.
We'll see if this can give us our target before the session, the U.S. session opens up.
Yeah. Yeah, because U.S. strength would put us in a short, right?
U.S. strength will put us in the short. That's correct.
And that's what I saw on Euro USD as well, is that the U.S. dollar seems to have gotten quite a significant amount of strength. So maybe it's that announcement that's coming up or something.
I would like to see it close below this blue candle right here. The body of the blue candle. I'd like to see it close below that.
Yeah, that would be significant.
Matt?
Hey.
Hey, Beach Panda says, Matt, we take a 10 pip stop loss at Hawkeye. Susan also uses a 10 pip stop loss for Fusion, but she sticks to the 15-minute. Should we be using a tighter stop loss?
You take that one, Matt.
That's a great one. I guess I opened up that can of worms. Well, as a generally, I'll use 7 to 10. So she's been using a 10 pip stop loss on a 15-minute candle. I'll have to go visit what she's been doing. I haven't actually checked it in the last couple months. I know I spoke on one of her sessions a couple months back when we were about to launch Hawkeye, but I haven't spent a whole lot of time looking deep into her methodology. Just being honest. So I think there's an opportunity for me to go and and find out, just to see what she's been doing with 10 pip stop loss on a 15-minute chart. I mean, I've heard that there's been really good things. People have been doing really well, so. But the challenge with the tighter stop loss, it works when the markets are behaving in a certain manner. The last little bit, I'll be honest, it's been hard to use anything tighter than a 7 pip stop loss because it just doesn't have the pullbacks and everything. The activity on the charts have stopped me out more often than I feel comfortable admitting. Let's put it that way. So that's why I've lowered my risk pip wise, the size, my lot size on the account, and just increased my stop a little bit just to compensate.
Yeah, I think right now I've been pretty much using some. It varies between no less than 7, but usually varies between 7 and 10 or 12. I rarely go any higher than 12, and normally, even if I put a 12 pip stop in there, that's more of a catastrophic. I'll get out of it before then normally, because my stops are usually generally placed reference to moving averages and price action more so than the hard 7 pip stop, because it varies between different pairs. But
Yeah.
I'll start with the 7. I'll start with the 7 to 12, and then I'll tweak it. But rarely do I let it go to, more than 7. If I get stopped out by more than 7, it's because I wasn't either it just spiked and took it out, or I wasn't paying.
Here we go.
Attention.
Let's see how accurate that target is. This looks good.
There you go. I just got my targets right there. That was 15 pips. I had 15 pip targets set in. I just got 15 pips.
Beautiful.
And it's coming to see if it comes into this target right here.
Oh, I think it will.
See if it bounces. See if it hits the top of this and just bounces.
Based on some other things.
Yeah. Well, this was basically what we drew off of this retracement.
Yeah.
When you get a really sharp move down, it bases a little bit, then comes back up, and you'll see right here. This is our 78 to 1 to 1 retracement right here. So this is 78 from this. See where this thing pulled back. It went 78% of what this move was. And you can see it came almost down to the pip.
I took about 12 pips.
Oh, nice.
See that it's like this is within, like right now this is at 28.26, and the top of this is at 28.25. So it came within 1 pip of that target, and it's still may not be done yet.
No, I don't think it's done yet.
I think there's probably a good chance it could break through this zone and come back and retest this one.
That's a pretty significant move. I don't know if I'm staying in it that long, but I like getting a win for the week nice and early. Kind of sets you up for the rest of the week.
That's kind of where I'm at too. Is I like getting that, even if it's just a couple pips, just to get the positive energy going in the right direction.
Yeah, for sure.
Beach Panda has the positive energy. He's doing the happy dance. Hit my target on the GU. Happy dance.
All right,
good.
Go Beach Panda.
All right, I'm gonna
step
out of my position here.
We did take a little bit of heat up here. I mean, but it didn't. But
it wasn't much, Al. It wasn't much.
No, it was like what? Let's see. Let me measure this one.
Maybe
out.
8 pips.
I got on the close here to here. No, that's 10 pips. That's 9 pips.
Okay.
That's if you got in right at the close of this red candle.
Oh yeah, no. I waited for a little bit of a pullback.
Yeah. If you came back and tested came back and waited for the test of the wedge and you got in and there again, let's take a look at the 1 minute chart, see how that worked out what it worked out for us on the 1 minute.
Yeah, so I'm out of both of my positions. I'm gonna wait and see if there's an opportunity for a second entry on the downside. If it pulls back nicely, maybe there is, but
And
We'll see.
I'm done for the day. So, but anyway, we had this night. So we had, but here is our third hit. Came back down. Here is our. Remember, it came in. It got. If you got in, remember I said that when this thing hooks, if you can get a hook on the green below the yellow on a pullback, and you get a close below, that's not a bad place to try and get in. It really cuts out your risk, because now you're still right now. If you can catch it on this red candle close, this is why I've been trying to get some of these secondary wedges. That gives you 8 pips to the top of the moving average, and you can see at the top, if you got in here, we were able to. So you get in here, we got down. This gave us almost 10 pips here. It came back, retested it, but from where that red candle is, that's only pretty much right back to break even. Came back, tested the moving average, got another break. So let's take it from the secondary break. Let's from, and so you didn't get in, you took it off of this one. The risk off of from this move to the moving average, which was right about, well, this blue candle, that was 6 pips. So you're still within your 7 to 10 pip stop. You still respected the 21. Now you came down. Now we got your 15. Is that if you can see, if it comes back and it breaks a wedge, or it comes back and gives you an entry, pulls or bounces off, comes back in, and this moving average can't cross the yellow, the green one doesn't cross the yellow, that still maintains, and it hooks back, your risk is minimal at this point. If you're going to be using the, so a lot of times I'll use this moving average. A close above the 21 moving average is usually my get out point. And oftentimes that's, if I got down here, the close above that would have been 13 pips. That would have been a little bit higher than I would have probably liked, but it's still within a reasonable amount. The sooner you can get in with a certain degree of confidence, the more you can tweak that.
Oh, the white moving average is a 62, right? Not a 21.
That's correct. Yeah.
Yeah.
Okay.
Yeah, we don't use 21.
Did I say 21?
Yes.
I don't know.
Yeah, it's the 62 moving average on the 1 minute chart. Is what the white one is. Maybe that was nice. Let's take a look at the U.S. CAD. Is everybody done with? Does anybody want to see any more of this one? We go and take a look at what the U.S. CAD is doing, or what it did do. They said that was a nice trade for. That's my trade for the day.
Yeah.
U.S. CAD right here. Here was the alert, and it said, let's see how are we going to draw? That was a ascending wedge, I believe. So this is a 15-minute chart. See this, by the time we got the alert, it was already way up out of the chute. It was ascending. So at the time, I would have been using the pivot high, a pivot low. Check back and see if I can go any lower here. Actually, I like this one better. I like this area better. Let me start from here. Check this. So we have a high, a low.
That's a pretty big wedge.
Well, it is. It is. I'm not done yet.
Oh, okay.
And and so what I'm doing is I'm just trying to figure out, what I do is I try to start where I have a high, a low, a lower high, and a higher low. And I start from there. Then I start bringing it, see if I can tuck it in a little bit closer. Now, the problem we have here is the fact that by the time we got the wedge alert, this trend line was already broken. Here's an anchor. Here's a lower low. Here's a hit. This was actually the low. That when this line here got broken, so if I can bring this over. When this D got broken, we didn't even get the alert yet. So by the time we got the alert, it was all the way up here. So you almost need to go with this area. And see how close we can tuck it in when we had the alert, which would have been right about on this candle right here. now the question is, what do you do with this? I mean, as I said, I didn't know what to do with this because basically, in my mind, it had already broken out of this consolidation area. Already took this one out, and so what do you do with it? So the only thing you can really do at this point is go to the higher time frame and see where our targets are going to be. Because here is the, I mean, this was on the 17th. This was what, Friday, I believe. This is Monday, Sunday. Here's Friday right here. This was Friday's high. Here's Thursday's low. This is the range that it was actually, and then here's a low, a high, higher low over here. Then we had a series of lower highs, but now we got the break. So with that break, we have to go to a higher time frame to see where our targets are going to be. If I go to a daily chart, I'll just start with the daily chart since I don't know how far back it's going to go. Spread this all out. And so right now I have to say that this would be from a daily standpoint, this would be where the target's going to have to be. And we're already pretty much up there already. If I move this way, you see how this came right on up to this little wick. Strong move down, a lot of wicking going on in here. This one broke, came up, tested this area, couldn't hold it. And now we have this wick. Now if it can break this, then it's going to probably come up to this level. But look at the wick of this thing on a daily chart. This is one daily wick right in there.
Yeah, that's big.
That's pretty big.
And there's
Now we'll probably be able to tweak this out a little bit, but let's just take a look at this. I said that's why you need to at least know where your higher time frame levels are, because when you get if you get a big gap, like in here, even here, there's a big gap. You have to look and see that there's something in a higher time frame is going to have to address. And like I said, right now, this is that little wick over wick. Even though it looks pretty small on a daily chart, it's probably, let's see what it is, how it measures. From there, let's see.
there's another alert ascending on the GU.
GU. What's
ascending, I don't see it.
Yeah.
I can't make an ascending. The only ascending wedge I have is not really a wedge. I don't know. I can't.
Pretty sure that was this is at 9:15, and that was this. Well, let's see. That's the one we just made our money on today.
Yes.
Yeah, exactly.
9:15. Ascending, you say?
Yeah, it's weird.
Yep. Thanks, Beach Panda, for that.
Okay, so we're still in our target. Ascending. Well, I could see. Ugh.
You know what I mean? And you're on
Yeah.
a 1 minute chart. You're not going to get a.
At 9:15. That was the alert there. Yeah, we're on a 1 minute chart, and I am.
It's looking sad.
Yeah, I went. Well, the only way you could go with an ascending is if you come all the way back in here. The only way I could do that was if I came all the way back in here, below where the A's already been broken. So we have to come back over here to the. Let's go 15-minute chart. Let's see if we can find something. Let's just play this one. Let's play this one out a little bit. I'm gonna keep those. I don't want to lose my drawings on this, but I may tweak it a little bit. Let's go to a 4-hour chart. See if we can find something here. The only way you could do an ascending if you started with maybe these two. This wick to this wick. See where that one looks on a 15-minute chart. That's this candle right here. Let me take this one off. Let me take these off since we're kind of done with this part. Here's the wedge. Now this is the one I just drew all the way from way back over in here. So that would be the ascending, and you might have the, I don't know, so we can do this or not. Let me take this target out of the way. Let me move this one over a little bit and see where we go from here to, yeah, I'd have to say you have to stick with that one. We already had the break of that. It's already broken as far as I'm concerned. What do you think, Matt?
I
This
don't
is
know.
this is where I could go with the ascending. This would be the break, but it's coming right down. I mean, here's it broke, but it's already that's where it came in. So here's an anchor. Here's a hit. We could take this as the third hit, I would say, ascending. I mean, this is on a higher time frame. Let me see. That's at 28:15 to 28:14. Yeah, we could use this as an anchor. Here's a hit. Here's another hit. Here's our third. Here's our validation of the trend line. And we may be looking at this as be where it's going to start to reverse. Come back to our 15-minute chart. We're in
Yeah,
our
see, we're
demand zone.
lower again.
It came in our demand zone, couldn't close in here, bounced right back out again. So it did make a new, it did from the A where it came in earlier this morning, couldn't break it, came back up, broke into it. Now we have to be looking for I would have to be looking for a reversal somewhere in here on a lower time frame to maybe come up and retest this wedge. But by 9:30, I'm going to be doing something else today.
Yeah. Yeah, because we don't want to hand back all our profits.
No, we had a 15 pip trade with a 2% based on a 7 pip target, and we just doubled. We got our 4% for the day rather than just a 2. We don't want to give that, but you don't want to give that back.
No. I just took. I can show you how I took that. Took a sell before the alert.
If you want to do that.
Actually, no, because I'm looking at your screen and I can see where I took my entry anyway. I took it on the break, so I had another.
On the
I
break
drew
here.
it. Yeah, I took another. Yeah, because I put a trend line from the bottom, from our bottoms that we had.
Here.
Yeah.
Yep.
From the other alert. So I just kept on drawing trend lines. I saw 2 points and I put one there, and then I waited for price to come and challenge that trend line, and then I took a sell. So this one is 10 pips. Oh, still a little bit more.
Still. Let's see where it's bouncing off it. Do we have any fib lines coming in here?
Yeah, see if you can find me a target. Because this just broke the low here.
Where's our 5 British US?
Yeah, this is my exit here. So I'll take.
That's a 15. Let's go on that's a 15-minute chart. That's why we're not. Our 15-minute target is all the way down here at this one.
Oh, yeah,
so
it's too far.
If we go to our 5-minute, go our 5-minute target. Here's our 5-minute target right here, the red fib line, 28.22. Now it is testing this. This is the third hit from that long one way back 4 hours ago, or that 4-hour chart. Came back, tested. We did get a break below, but it's not. But look where that is. I could see where it could possibly. Here's our 5-minute fib line. It's a red fib line. That's right here. So you can see it. 5-minute red. See if I get my colors right. I know I was having some difficulty finding the right. There you go, 5-minute red right there. We'll see if it comes down and tests that. Could very well. I said it would not totally surprise me to see this thing come all the way down and retest this level in here, which is right here where our blue. Remember we say a lot of times these things go from blue to blue. And so right now it's in the middle of this range where the 2-minute line is. Let me just mark this. This is where we came in right here at the fib line. So here's our blue, the 2-minute or 5-minute blue. which is right here. 5-minute blue right there. The red, the green. The 5-minute green right there. 2802. And right now it is, and here's the blue one. So this demand zone is right in the middle. And you see how it's just bouncing off of that price. If it can break through, if it can close, come back and retest it, then you could possibly come down onto this one. But I'd be looking at something of the nature like something like this. So here, then we're coming down, close. Retest it.
I'm trying something, Al, on the just with the small lot size. I'm trying to take the pullbacks, seeing if there's a way that we can do that in a way that doesn't hurt people. Because the pullbacks on these moves are pretty significant.
Yeah. Well, I guess the question is, I guess one way to possibly look at that would be off that 1 minute, the moving averages on the 1 minute. And we're going to go in about 2 minutes here. If you go to auto here and get this, if you look at all the pullbacks, if you can see all these pullbacks where it comes up, you get the crossover. Once the moving averages cross over, you look and see where the closes below a blue candle with the cross. So like, and there was like, in here is like, you've got the moving average. These actually, remember I said when I took this one here, it didn't cross the yellow. Well, here it crossed the yellow, but it's still respecting the 62 on the 1 minute.
Exactly.
As long as it respects the 62 on the 1 minute, even if you get the cross of the yellow once you get that cross and it comes back and crosses back over in your direction, if you can get a close below the blue candle before it crossed with a red candle close,
Yeah.
that would be an entry. That would be an entry. And then your risk level here would be, say, like from here to the top of your, you still have to give it probably 10 pips, but it would help to, if you want to try and catch these bigger runs to do on these pullbacks, that would be one way that would be about the best I could suggest you to do. And like this one here, like right now, it came back, pulled back, it didn't cross over. Now, if you can get a close below the blue,
Yeah.
close below the red. So I want to see it. I'd like to still see the close below here, below this one, and close below the red fib line. If you can do that, then you might be in a good spot to be able to catch this one. You have the close. Actually, here's my red fib line. Here's my pullback. So if we get a close, pullback, and retest, then you could be in. I wouldn't do it more than 3 times, though.
No, because it's not going to do it 3 times. I've noticed that it'll go maybe 4 max, but 1 or 2 is pretty good. You don't need a lot, right?
No.
And now we're deviating a little bit, but
get your daily bread. We got our daily bread. It was a nice little trade. Now go and try and get a life, or just stay here and just keep practicing and demo, but don't give back your gains, especially if you're alive.
No.
And on that note, it's 9:30. We need to get out of here in case somebody else needs the room. Thanks everybody for coming in, and we will see you again tomorrow at 8 o'clock.
Thank you very much, gentlemen.
All right, guys.
Have a
Bye,
good day.
everybody.
Have a great day. Bye.